Welcome back to Investing Outside the Box, the show where we uncover overlooked strategies that help you grow and preserve your wealth without relying on Wall Street's same old playbook. I'm David Harris, fiduciary advisor and founder of Alternative Investment Advisors, and today I'm going to show you how to pay less in taxes using smart, little-known tactics that leverage the power of real estate, energy, and opportunity zones. If you're a high net worth investor, made a large gain in crypto, or sold a business recently, this is an episode you don't want to miss. Let's dive in. Most investors think a Roth IRA conversion means paying a massive tax bill up front and crossing your fingers that it works out in the long run. But there's a better way, one that could cut that tax bill by up to 40% if done properly. Here's the strategy. Instead of doing a plain vanilla Roth conversion, pair it with a real estate investment that produces large paper losses in the year of the conversion. We're currently working with a sponsor whose real estate fund offers accelerated depreciation, which creates passive losses on your tax return. Those losses can directly offset the income from your Roth conversion, reducing your tax liability in the year of conversion. And here's the real win. Once the money is inside your Roth, all future gains become 100% tax-free. This is one of the most powerful tax tools available to high net worth clients, and almost nobody is talking about it. Let's talk about real estate income, one of the most reliable and tax-efficient cash flow strategies available in today's market. There are private real estate investments right now that offer a preferred return between 6% and 10% annually, paid monthly or quarterly. And in many cases, that income is largely sheltered from taxes through depreciation and cost segregation. But here's where it gets even more exciting. Many of these investments also offer equity participation, which means investors not only collect steady income, but also share in the upside when the property is refinanced or sold, often targeting 2 to 3 times your original investment over the life of the deal. Let me be clear. This isn't about speculation or flipping properties. These are professionally managed, institutional quality real estate assets, multifamily, industrial, workforce housing, held for 3 to 7 years, often with value add strategies. And when structured properly, a significant portion of the income is either tax deferred or completely offset by depreciation. For high net worth investors, it's a rare combination: consistent income today and substantial upside tomorrow, without giving half of it to the IRS.
Let's get one thing straight from the start. Opportunity zones aren't new. They were first introduced as part of the 2017 Tax Cuts and Jobs Act. But under the current administration, we're seeing a second wave of reforms, and they've made these zones more attractive than ever. We're talking expanded eligibility, clear compliance guidelines, and in some cases, enhanced tax breaks that can shield you from capital gains in ways that average investments just can't. So what exactly is an opportunity zone? At its core, it's a designated low-income area that federal governments want to revitalize. If you invest in a qualifying business or property in one of these zones and hold your investment for the required amount of time, you can defer, reduce, or completely eliminate certain capital gains taxes. That's right. In some cases, your gains can be completely tax-free after 10 years. Now here's where it gets interesting. The recent updates to the law have expanded the range of eligible projects, particularly for small and medium-sized businesses.
Now let's talk about one of the most misunderstood but incredibly valuable tax strategies available today: qualified opportunity zones, especially one we're tracking in the energy sector. This specific OZ investment does something almost no other investment can. You can invest short-term or long-term capital gains. You defer paying taxes on those gains until April of 2027. And here's the best part. This energy-based OZ fund is structured to generate enough income in the interim to pay your deferred tax bill when it's due. Let me repeat that. You invest your gain today, and in 2027, the investment may distribute enough cash to cover the tax you owe without having to dip into other assets. This is especially powerful for investors who sold the business, had a big crypto exit, or triggered large short-term gains in the last 6 to 12 months. Instead of writing a massive check to the IRS this April, you can put your gain to work, defer taxes, generate income, and potentially eliminate taxes on any future appreciation by holding the investment for 10 years. It's rare, it's real, and it's something we're actively discussing with clients every day. While we're on the subject of energy, let's talk about another opportunity we've reviewed, a direct energy investment that targets 8 to 10% annual income, most or all of which may be tax-free due to depletion allowances and intangible drilling costs. Here's what makes it stand out. The income is tax-advantaged from day one. There's potential for a back-end distribution when the asset is sold, and it provides exposure to an asset class that historically performs well during inflationary or volatile periods. This strategy isn't for everyone, but for accredited investors seeking steady income with favorable tax treatment, it's a standout in the current landscape. Again, this is a product that has gone through our full due diligence process, including independent third-party analysis to make sure it fits the standards we hold for all alternative investment advisors' offerings. Whether you're looking to convert your IRA the smart way, generate tax-efficient income, or reinvest a large gain without triggering a massive tax bill, alternative investments can offer a smarter path. But here's the key. The details matter. At Alternative Investment Advisors, we act as a fiduciary. We dig deep. We partner with independent due diligence firms to make sure that every investment we offer to clients is transparent, vetted, and customized to your goals. If your current advisor isn't showing you strategies like these, it may be time to take a closer look at what's possible. If this episode opened your eyes to a better way to manage taxes and build wealth, don't keep it to yourself. Subscribe, share this episode, and leave a quick review if you found it helpful. Then go to www.altsadvisors.com and schedule an appointment to see how these strategies might apply to your personal situation. We'll walk you through the opportunities, the risks, and the options so you can make informed, intelligent decisions with your wealth. Until next time, keep thinking differently and keep investing outside the box.